Hello and welcome to another update video about AGIX. On the AGIX chart, we still see here this potential 5-wave move to the upside. We talked about that over the last few weeks actually. It's a 5-wave move that developed between the 10th of June and the 3rd of July. We can only count that really as a diagonal structure, not as an impulse. So we need to be a bit careful here to make any sort of too bullish, let's say predictions that are too bullish. In the end, all that we can really do is to map out the bullish support, basically to highlight where does the risk lie in the current situation here and what is the level below which the bullish potential will get invalidated. We need to be careful and we need to understand that the move up is only a diagonal, so it needs to prove itself. Impulses are much more trustworthy. Diagonals need to prove themselves. How do they do that? Well, look, when we had the 5 waves up, I gave you a support area here between the 38.2 FIB level and the 78.6 FIB level, and it can max it out if it needs to. It goes down all the way to 19.3 cents. As long as we're holding that level, I can get away with counting that as a 1-2 setup to give it a chance to rally higher. It gives me the level below which probabilities start to shift. So below 19.3 cents, probabilities start to shift towards something more bearish. Until then, I think a rally in a third wave has a chance. It's pretty much in line with the Bitcoin wave count. It's just that, okay, can we actually really hold that 19.3 cent level? Don't have a very good view of the micro count here. It is very choppy. The C wave actually looks a bit like a diagonal structure. Very, very messy. But my take would be that one more low is certainly a likely option here. And if it gives us one more low here in this C wave of the wave 2, then 20.9 cents is the next support and then 19.3. We can also use the Fibonacci extensions by measuring the wave A, and then we compare that to the length of the C wave. And here a typical target would be the 1.618 extension, which is at 19.95 cents. So basically, yeah, exactly between these two levels I just mentioned. So if we get one more low, then I think a key target or support area would be between the golden ratio, so the 61.8 retracement at 20.9 cents, and the 78.6 retracement at 19.3 cents. Then a reaction to the upside in the third wave is likely, but only if we get really a reaction here in this area. Only then a rally can start in a third wave. What would be a target? Well, what we can do, we take the length of the wave 1, and then I have to project it to somewhere. Let's assume we will come down to the 78.6 retracement. Target for a third wave would be the 1.618 extension at least, and we would be looking at 35.4 cents at least. Yeah, that is what it needs to do to also convince us that something more bullish is going on here. If we don't even get to that 1.618 extension, then something more bearish is going on, right? And just a larger correction maybe. So this is what I'm watching for. And in terms of having a confirmation that the third wave is running, I need to see a break above what I have labeled as the wave 1, the end of the first 5-wave move. That is the 27.1 cent level. If we get a sustained break above that level, then we have what we call confirmation for a third wave. So yeah, we can give the bullish case a chance as long as the 19.3 cent level is holding at the moment. Below that level, new bear market lows may be coming, or at least a more sustained drop, a more substantial drop to actually below the June low. And then we talk about possibly a move down to 11 cents or so. Okay, that's my update about AGIX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.